In this video, I'm going to show you how to pay your car loan faster. The best part, every single info here will help you save a significant amount of money, even if you have one of the best auto loan rates. So you got a new car. There is a big payment every month. There is nothing worse than paying high amount of money on your auto loan for years. So you might wonder what it means to pay off your car loan early. Imagine, in addition to having better cash flow for other things like retirement or your next vacation, you may also benefit in other ways. But before we get to the how-to, let's look at some examples of why paying off your loan early can be awesome. Before you know it, you'd have more money to spend. You'll save money on interest and you could get a better credit score. Paying off a car loan early can have some benefits, but you should still consult your lender before making any changes. You don't just send your bank a big check and call it a day. Depending on your loan agreement, early payment penalties can ruin the whole idea of paying off your loan early. If you're thinking of paying off early, it's time to make it happen. Now, let me be clear. The main benefit of paying off a loan early may be saving money on interest if you have a simple interest loan. Just imagine the day when your car loan is paid off and the terms of your contract are fulfilled. The only thing that you'll need to do is to go to your state DMV after receiving the necessary documents to get the title of your vehicle legally transferred under your name. Here is how you can pay down your loan or pay it off early. Number 1, pay a lump sum in full. When you pay off your auto loan in full, you're done. Now, based on the day you plan to pay actually, this will include the remaining balance, interest, and any fees. You are especially at risk if your lender counts extra payments toward the principal. If you are able to afford it, this is a great way to pay off your loan quickly. Paying your auto loan off faster can be done using extra money from a bonus, tax return, or other sources. That leads us to the second way, which is making a partial lump sum payment. You can get ahead of your loan schedule by putting down a few months worth of payments. The faster you pay off your loan, the more interest you'll save. Here you could also use the snowball or avalanche methods to make your debt repayments. Snowballing involves making extra payments until your smallest debt is paid off. If you have multiple loans, start by paying off the smallest and work your way up. I would recommend this to anyone who wants to pay off their pending loan. At the same time, you can use the avalanche methods to save money right away. By using this method, you make sure the highest interest loan is paid off first before moving to the low interest loans. The third way is to make extra payments each month. You can do this by making bi-weekly payments, throwing in an extra $20 or more whenever you feel like it, or even doubling your payment if you've got some extra cash. One interesting fact is that you can make an extra payment every year if you pay bi-weekly. The reason is that not every month has 4 weeks. Some are a little longer. With monthly payments, you'll make only 12 full payments, but when you choose the bi-weekly option, you'll pay 26 half payments or 13 full payments. Adding one extra payment will help you pay off the loan faster. Moving on, you could make larger payments each month. A rounding up is an easy way to do this. As an example, if you pay $482 a month, you should round it up to $500. It will seem like a small difference to you, but it can add up over time. Of course, you can calculate the monthly payment with a shorter long term and start paying accordingly. Using an 18 months loan as an example, make payments based on the payments you would make for 24 months. Request extra or larger payments to go toward your principal. It may not be an option for your lender, but it can help you build equity faster instead of paying mostly interest each month. Making extra payments on the principal lowers the amount of interest you pay. In some loans, extra payments go towards the interest that's accrued since your last payments, then towards the principal. With other banks, you can apply the whole amount straight to the principal no matter when you pay. By making your extra payments at the same time as your monthly payment, you will be able to avoid the bank applying the extra payment to interest first. As a result, the money will go towards the principal loan. You'll need to check the box on the payment slip if you want to make principal only payments, and then double check that your payments are actually applied to your loan directly. Guys, it's all about making extra payments consistently so you can pay off your loan faster. It's still better to make extra payments with money from bonuses or tax return than just paying on the loan. One of the most interesting methods is to refinance your loan. If your credit score or financial situation improves, you can refinance your loan to get better terms. You'll probably get a lower interest rate by negotiating an earlier payoff date. It's probably not worth refinancing to extend your term length even if the monthly payment is lower, since you'll end up paying more interest overall. There is also a chance that you'll go upside down on your loan, which means you owe more than the car is worth. As a result, if you want to trade in or sell your car before it's paid off, it won't be easy. Plus, you'll need to pay the lender the difference between the car's value and the loan. Refinancing auto loans gives you a chance to get a lower interest rate and a longer loan term. In reality, a refinance loan is just a new car loan on your old car. Make sure you figure in the fees and extra costs as well. Now, arguably, the fastest way to pay off a car loan is either by auto loan refinancing or closing the loan using a lump sum payment. To better understand how much you'll save by paying off your car loan early, you should also use an auto loan calculator. After you figure out how much you owe and whether your lender charges penalties, using a calculator will make it crystal clear the money you owe. You need to make sure you can save more than you'll pay in prepayment penalties. Even if you don't save a lot by paying off your loan early, you might find other benefits. Getting rid of your loan early could increase your credit score and give you more money every month. Now, depending on your situation, there are cases you may not want to pay off your loan early. Depending on your personal situation, you might not want to pay off your auto loan early. The lender might charge a prepayment penalty, or you might have other high interest loans or credit cards that are worth paying off before paying off the loan early. Having to pay off a car loan in full could also significantly impact your ability to deal with emergencies. Making payments on time and building a credit history can build credit too, besides paying off your loan early. However, if you've got good credit, it won't matter. On the other hand, you may find it beneficial to stick to your normal payments. No matter what you decide, you should always check with your lender before making any big decision. Stopping car payments can be a life-changing financial move. As explained in this video, you have a variety of options when it comes to paying off your car loan faster. No matter how you do it, make sure you are in a position to benefit from paying off your auto loans remaining balance early. With that being said, thank you so much for watching. Don't forget to let me know in the comments if you got any value from this video. It's 2022, subscribe if you like, hit the notification bell if you aren't already, and I will see you soon.